Hey everyone, and welcome to Stock Talk on October 24th. Now, went live earlier today at the last hour of trading just to talk to you guys about important developments, changes that were moving through the markets that differed from what we talked about in the previous days. Hence, that's why I came on. It was a crucial day, and I'll take you guys to the intraday chart. Obviously, a big drop on the S&P 500 or SPY. This is the intraday chart that you're looking at. But how did I know there was a problem in the markets? First of all, you guys can see my definitive support line around 269.40, right? That's my support line. So yesterday we saw a pretty nice rally back to the upside. So there were a couple things that concerned me. Number one, can you guys see that we didn't hit the high today, right? That was the first concern. Second concern is you guys can see that we were retracing back a portion of the move. Okay, I wasn't too concerned at that point because yesterday I talked about we could certainly retrace a portion of the move back. But when we saw that rally, and this rally is supposed to move back to the upside, when this didn't occur and we started selling off, that was a warning sign in my head because you guys can imagine we're already fluctuating very close to the support, to the bottom edge of my support. And should we break below the support, that's a problem area. And therefore, I went live around the last hour of trading, and you guys can see how every attempt at a rally back to the upside got sold off. And you guys can check it out. It was almost like a play-by-play, minute-by-minute kind of basis in which we were seeing the sell-off. Was continually telling people like, this doesn't look like a bottom. Look for more downside. Just refer back to that previous video, and you guys can take a look at that. So that's already posted on YouTube. So what can you say about the markets right now? You look at the markets, you look at SPY, and you can say that we pretty much ran out of time at the end of the trading day. We could have certainly sold off more by the end of the trading day, but we didn't because we ran out of time. Okay, that's the first thing. Second thing is this boxed area all of a sudden looks more plausible. Now, remember, in previous days, we were attempting this area as a possible bottom, right? Now that we've broken below it, now this area gets taken off the chart, and we have to reevaluate this in a different scale almost. We had this massive, another push to the downside. We need consolidations patterns to form before we can reevaluate for another possible bottom. Okay? Here's 258 to 261. I'm telling you, all eyes are now on that level. Why? It's because that's the area of support in which we found support in February, March, and May, right? All eyes are on this level. So here's the deal with this. Can we get a rally in the next day or the next 2 days that ranges from 1 to 2% higher in the indices? Yes, we can. Look how oversold we are. NQ down over 4%. SPY down over 3%, right? We don't see this very often. We saw NQ do that the first time, I think, the first drop that we did down here. But this doesn't happen often. And when it does, there's usually a good rally to the upside because here's the 20-period moving average and how oversold we are. That's the first thing. Second thing is, can we come on lower? Of course we can, right? Of course we can. And hence, I want to place caution. In my opinion, any big rally eventually, for now at least, will get sold into. Do I think the markets will reverse at some point back to the upside to 270, 280? Yes, I do. But the question is, when is it going to happen? Keeping in mind that midterms is, I believe, on November 6th. So the problem here is, while I like to, potentially see where the markets will rally from, November 6th is still a little around 2 weeks away. That's giving markets, first of all, it's giving markets time to drop. That's what we saw today. Second thing is, we could still consolidate, but we need to see some consolidation patterns first. Now, the momentum's obvious to the downside. So, you know, that's that. So just be very cautious as we move on forward. I think we will still rally now at some point from this level, right? But got to see that, you know, consolidation area first. And hence, you know, I want to talk about it when we break a major support area like that today. I have to be coming on to YouTube and talking to you guys about it as it's happening. So that was really fun. I hope you guys enjoyed it. Did you guys enjoy it? Let me know what your thoughts are if you enjoyed the live stream. Take a look at TVIX. All right. Here's TVIX on the yearly chart. The one thing I pointed out on the live stream and to the course members is that the 200 period moving average has been acting as a resistance in the past. 200 period moving average is around 55, 50 at that point. Because we've moved higher, the 200 period moving average is also moving a little bit. You know, it's not pointing up, but it's also moving a little higher. Okay. $55.50 is resistance. So just keep that in mind as we're moving forward. Hence, you guys can see this boxed area. I'm going to remove this boxed area and move this to the $55 range. So around this area is where I would look for resistance. So, you know, that specific area. Okay, good. So that's what we're looking for in the future. You know, this one's moving up, moved over 17%. And like I tell you guys, when volatility is this high, even if it stays $40, it doesn't have to be $52.86 or $40. It's unhealthy for the markets. The markets will likely continue dropping. It's unhealthy. It's not good. So let's take a look at the VIX. 25.23. So not as high as the previous, but you know, getting there. It's getting there, right? It closed above its previous high, I believe, today. So it's getting up there. So, you know, look for potentially more downside to come on SPY. But if a rally occurs, look for it to be a big rally. I'm not saying a 5% rally or a 4% rally, but I'm looking for perhaps a 1 to 2% rally on all indices. That's still a big rally if it occurs. Okay. 4/CL. Oh, there's a lot to talk about today, guys. 4/CL and, you know, yesterday crude oil fell over 4%. I said, would it be, you know, it wouldn't be surprising to me for crude oil to move a little bit higher, possibly 1 or 2 percentage points, because we fell 4% yesterday. Okay. Initially, we'd go over 1% higher. We did do that as markets were stable, right? But once the market started dipping significantly, look at the move by crude oil. I can almost argue that it didn't have time to recover. And I can say that if markets do rally tomorrow, I think crude oil will do a semi bounce. But the big picture of crude oil is obviously to the downside, right? It's obvious to the downside, and look for lower prices to come with crude oil. I think crude oil, you know, some bear flag formations, right? We talked about bear flag formations in the past, right? On the yearly chart, here's the bear flag. Pull, flag, pull, flag, pull, right? We could form a flag pattern, so that if we do form a flag pattern, we do expect a little more upside before that next eventual drop. So just be on the lookout for crude oil. I think crude oil is still looking pretty bearish at this point. 4/NG natural gas. Natural gas outlook hasn't changed. This is one that hasn't changed for quite a while, because we talked about this was a topping pattern, and you know, this likely is going to play out, in my opinion, to the downside. So you know, here's the resistance around 3.300, and I think any bounce towards that level could eventually and likely get sold off. So you know, I talked about yesterday, yes, we did, you know, natural gas did go higher. Might drive people nuts if they were trying to short, you know, natural gas. But today, you know, went a little bit lower. So this can take a while, like I said, before it eventually comes down. You know, it took a good part of almost a month, I think, over here. So here we're getting close to that area. So that's natural gas for you guys. And what's the last one? 4/GC. 4/GC, the one thing about this, and I've talked about this in the live stream today, was that while this is pushing higher, I don't really like the look of JNUG or JNUG. This is pushing higher. The futures look like it's trying to move higher, but at the same time, look for a resistance. So let me stretch this line to the right. Here's your resistance area of 1243. I actually didn't realize this until today because I had these resistance lines set. I just haven't stretched it to the right. That we hit it yesterday and got sold off of the resistance. So now that is interesting because you know, it might take some time before we are able to actively close above that resistance area. But chances are, you know, this is bullish. Right? Can we come down to the box? It can, but this is bullish. And when we do get that heavy volume buying that occurs and push us, when and if we do that, then look for, in my opinion, JNUG to have higher prices, JNUG. But right now, you guys can see there, this chart looks a little lopsided. Yes, we had to push higher, but we were selling off every single day during the trading day. So while this could be moving higher, what this is telling me right now is that it's not ready to move higher just yet. And that's just what the pattern's telling me for JNUG. Okay, so we tackled a lot of tickers in the Stock Talk, not the Stock Talk, in the live stream earlier today. So if you have any more tickers, I'll be happy to take a look at it for you. Please hit the thumbs up button. You don't have to, of course. Guys, if you don't find these videos helpful, you know, that's perfectly fine with me. I do hope that these videos will become helpful in the future in terms of not me telling you what to do, because that's not what I'm here to do, but me helping you with your analysis at the very least, right? So perhaps visualizing the charts a slightly different way, or giving you guys, you know, some sort of tools. And if you guys want more tools, you can of course check out the course in the description box down below. So thank you everyone. I highly appreciate everyone watching these videos and taking your quality time to do so. Let's take a look at a couple of your tickers, starting with Addy Boy's MU. So the MU is Micron. Micron, and I've taken a look at this chart, is in big trouble. And the reason why it's in big trouble, not only because of today's move, now that we're overextended, right, or oversold, but you know, the next area of support is around 32.40, and that's, well, now that is $3 away. So earlier it was around $4 away. Now it's $3, but $3 is still quite a bit, right? So just keep that in mind as we're moving forward into the trading day. You know, can we have a bounce up? We can. Like I said, we can certainly expect a portion of a rally back up, perhaps, but you want to be cautious because this is a declining pattern and there is no sign of reversal. That's the big problem with Micron. No sign of reversal, and this is a cascade down to the downside. And where it meets the bottom, I'd probably be more interested if we have a bottoming formation. But, you know, since we don't have a bottoming formation, I'm not the first person going to be, you know, looking at this one just now at least. So Micron is that one. All right, Paul, please check out THO. Let's take a look at THO. Yeah, so sorry guys, but a lot of these charts are going to look lopsided, and I'm probably going to say for most of these to wait for an area of consolidation first. This one not only has come down since, you know, early this year, but this is a continuation move back to the downside with no end in sight. So this one could certainly retrace, possibly back to 62.52, possibly even lower, $55. So this is on a downtrend. If you're shorting this, you know, you have an area where you could possibly short, but if you're going long, I certainly don't want to catch something like this, in my opinion. PRVCF. So PRVCF is yet another penny stock, and you know, this one is just not good, right? What is going on here? And then, you know, we have, you know, unless you know something about this company that I don't, would be interested in this one. This is on the declining formation, and this is likely to push onto the downside. So This is on the OTC, so once again, you know, not my favorite stock. Thanks, Ken. I'm already losing my voice. My goodness, because I did that hour long. So, all right, guys, that's it for today's video. Appreciate everyone watching. You know, I think everyone's going to be monitoring SPY, the SP 500, and then guys, monitor what futures does or overnight today, because it'll be very interesting. Every time we have a big move like this, you know what usually happens, right? We get some more. There's obviously more volatility. That's what's happening. So every time we get this cascade move down, we're gonna get more volatility. So you think that these moves are significant, look for more of these moves, intraday swings from 272, well, not these ranges, but like $4-6 moves in one day. That is certainly possible with this environment. I think it's good for day trading, for swing trading. Be very careful, and I think pick your positions carefully if you're swinging. Okay, guys, thank you very much for watching this video. See you guys tomorrow, and of course, happy trading.